Tax revenues are really a public resource. The public has the right to know how these resources are utilized, what exemptions are given, and what are the opportunity costs of these exemptions that have been provided. Access to information on public finances is of particular importance in a democratic society. Public revenues, tax revenues, are made up of resources from the public, and therefore the public has a right to know how these resources are utilized, what exemptions are made, and justifications for such exemptions. In this context, Verité Research filed 2 right to information requests with the Department of Inland Revenue. The first RTI was a request for information on all of the tax exemptions that have been provided, the basis for those tax exemptions, and also the foregone revenue as a result of those tax exemptions. The second RTI, filed with the Department of Inland Revenue, was requesting information on details of sectoral breakdown of tax revenues, such as the sectoral breakdown of VAT, income taxes, and so on. Now, both of these RTIs that were filed by Verité Research were rejected by the Department of Inland Revenue. There was no specific reason given for the rejection, except to say that either this information was not available with the Department of Inland Revenue, or this was already available online. Now, with regard to whether this was available online, the IRD did not give information as to where this information might be available, which means to imply that the Department of Inland Revenue does not have access to this information that is requested. Now, this is all the more problematic. If the Department of Inland Revenue, if the government does not have information on revenue foregone out of tax incentives, or it doesn't have information with regard to the sectoral breakdown of tax revenues, that means that there is a significant lacuna in the data available for analysis. For instance, how does the government provide new tax incentives and tax exemptions without having a sense of what the revenue foregone from previous tax exemptions are? Furthermore, with regard to sectoral breakdowns of revenue, if you don't have information on whether revenues are coming directly from, say, the construction sector or from the tourism sector, it's again very difficult to provide analysis to be able to discern new tax policies with regard to this kind of measure. Another reason for the rejection of the RTIs was that the information requested was of a personal nature and not in the public interest. Now, this reason is not valid because the information that Verité requested was really on the aggregate exemptions that were provided to industries and to different sectors. There was no information requested on individual exemptions or the identities of those who received such exemptions. So that the personal nature of that rejection is certainly not valid in this case. The third reason for the rejection of the RTI was the fact that the information requested would be too premature and would be prejudicial to the national economy. Here again, this reason is not valid because the information requested by Verité Research was historical information dating from the year 2000 to 2020, and it wasn't any information with regard to any future tax policies or any proposed fiscal policy measures. Verité Research appealed to the designated officer with regard to the rejection of the RTIs, but unfortunately, the appeal was also rejected and no reason was given. Now, interestingly, in the past, there was information provided in the public domain with regard to this kind of information. So, for instance, in the 2018 annual report of the Department of Inland Revenue, there was a sectoral breakdown of VAT revenues in the country, but in the 2019 annual report, this level of disaggregation was actually not available. So unfortunately, it shows that over the years, we have been regressing in terms of the making public data public. So why is this information on tax revenues so important? First, it's important in terms of assessing the rationality of Sri Lanka's many tax exemptions. Now, Sri Lanka has given several tax exemptions over the years. Most recently, with the Port City Act, a number of tax exemptions have been provided. It's important to have a sufficient amount of data to provide a rational and robust analysis with regard to the efficacy of such tax exemptions and to understand the cost and benefit of exemptions of this nature. For that, data is critical. Secondly, as we all know, Sri Lanka is one of the lowest tax collection regimes globally. Tax revenue as a percentage of GDP in 2020 was just 8.1% of GDP. Now, in that context, it's again important to have disaggregated data for instance, at sectoral level, to be able to understand and to discern where the leakages are arising from, and then to be able to find the rational policy measures in order to address those leakages. And finally, tax revenues are really a public resource. The public has the right to know how these resources are utilized, what exemptions are given, and what are the opportunity costs of these exemptions that have been provided.